Hello everyone, welcome back. Another episode of your favourite Market Bites podcast. And I'm joined by Josh Gilbert as usual. Josh, how are you?
I'm very well, Sam. I'm very well. How are you doing, my friend?
Yeah, good. Yeah, I mean, we've got, 2 days left of July, then we're into August. Incredible how quick this year has gone. But it's a busy week, in fairness. There's quite a lot going on, isn't there?
Yeah, I mean, there's so much to sort of get through, and just my shock then that you were saying it was August was surprising me, and it actually was making me think about what we talk about before we sort of jump into episodes, because I did a podcast today for a media outlet, we'll say. And before I was joining to talk about business, like, it was on the radio. It was like a radio that turned into a podcast. And the conversation of choice before we went on was dating in 2025. And they were talking about whether or not women should wear makeup on the first date. And I was just like, I just felt that they were going to be like, so Josh, before we get started, what do you think? And I was like, oh my God, don't ask me this. Let's just talk about, I don't know, other things in life. Let's go back to football. Ask me about that and we'll be fine.
Yeah, I mean, that could have been a spanner in the works, going on to talk about markets. And then, so Josh, just see how it's going.
Yeah, guys, I'm not sure if you got my job title correct, but I'm not here to talk about makeup. I'm here to talk about markets. So
Yeah, exactly. But by the way, as I said, busy week, and I was thinking about what we could discuss today, and I thought, well, look, you've got 4 Magnificent 7 companies reporting later today, 2 of them, tomorrow, 2 of them. So maybe it's best to focus on that. But then I thought, you've also got the FOMC meeting. And that could be important to talk about. And then you've also got non-farm payrolls, US PCE, or even just all the tariff updates, after the EU deal. So I thought, why not just discuss it all?
Well, why not, right? That's what we do here. It's Market Bites. We chop it down for you. Massive week though, isn't it? But it always goes like this. Sometimes we get nothing, and then we get it all at once, don't we?
Yeah, and I have to say, I haven't looked at the data calendar for next week, but I imagine historically after a non-farm payrolls, the Monday and Tuesday are completely dead anyway. There's nothing happening, but I imagine it's going to be a case of, once this week is done, you sort of just sail into the August month, and it's quiet for a while. But famous last words, we did have some decent moves in markets last August. The Japan carry trade, which started on one of the Fridays, finished on one of the next Monday before recovering. But it doesn't mean they can't get volatility. And actually, I remember the first sort of August in my trading life, August 2015, you had Black Monday. Chinese markets went berserk, and that happened in August. So yeah, there can well be some decent moves. But let's talk about what we've got going on this week. And as I said at the top of the webinar, you've got 2 magnificent names reporting tonight, 2 tomorrow. They make up 20% of the S&P 500, I believe. Those 4 names, which is crazy how big that is. So always important. So what have we got? What are the main things we're looking from them?
Yeah, well, a quartet of tech earnings, right? With the big 4: Meta, Microsoft, Apple, and Amazon. As you said, they're amongst the world's most valuable companies, and I think we'll try and give a bit of an overview of all 4 without going too deep into sort of all of them separately. But look, key themes: AI, of course, cloud growth, particularly Amazon and Microsoft, and then with Amazon and then Apple, the state of the consumer, and then Meta, a bit of a read into sort of advertising and those types of things, and also just consumer trends about are they still using apps and those types of things. But we obviously had strong results from Alphabet last week, so expectations are going to be high. A few mixed numbers coming through in the last couple of days. Starbucks, slightly weaker numbers coming through. Spotify, weaker overnight as well. Novo Nordisk, disappointing. So a few disappointments, I would say, over the last sort of couple of days. We'll kick off with Meta. I think, look, it's the second best performer of the Mag 7. Shares up over 20% year to date, just sort of trailing behind Nvidia. The big focus here is going to be its sort of growing investment into AI. It's got that new super intelligence lab that it's dubbed just in sort of recent months. So that'll be a huge focus. And aren't they, by the way, spending millions and millions and millions on staff. I saw again today in the news that they've just poached someone again, a top engineer from Apple. So they are spending big in that realm, which may come a bit of a worry to some Meta investors. You know, think back within the last sort of 4 or 5 years, that spending that sort of went uncontrollably out of the way, and after major cost cuts within the last couple of years, you know, there's going to be a focus really on balancing spending, you know, and growth, right? If you're going to spend, let's make sure we're getting the growth, because we've been there before under Zucks and it didn't go very well. Microsoft focus is going to be cloud, and of course AI. These are the sort of the twin pillars of its story. We're going to be looking at Azure growth. That's the focus, 34 to 35%. They guided for in the second quarter, and markets will be watching to see if we can get close to that. But look, AI demand has sort of remained solid. You know, the investments that Microsoft's are making into infrastructure and the tools, I think only give them more upside. And obviously we know that they've got that investment in OpenAI as well. So they're going to be a leader, no doubt about that. Apple, well, real tough time. Shares down 15% in 2025. Only trading behind Tesla is, you know, in that Mag 7 name. Again, it's going to give us some light on consumer demand. We're also looking to see around tariffs. You know, last quarter they said they could have a $900 million impact or loss in profit from tariffs. But it will be a question of, can their supply chain agility and their pricing power cushion any of that blow? We'll be watching that closely. But also the big point here is going to be AI. We need a clearer roadmap, because it's sort of been a bit of a disappointment. The developer event wasn't, you know, groundbreaking just recently. And we know they've lagged in AI, so we want to hear more there. And then, of course, we'll be looking to the next iPhone launch, is set to come through in September. So that could boost sentiment if management gives us, you know, any sentiment around upgrade cycles, those types of things. And then finally, Amazon. AWS, that's the focus. It's the key driver. It's the focal point. It's the profit driver. So investors should watch really for any commentary around, you know, again, AI, you know, cloud demand, infrastructure expansion. And we're going to be looking at margins, particularly with AWS, because we're looking at cost cuts coming through, but then also automation remaining a key focus in some of its warehouses as well. So fulfillment costs should be getting lower. We also had Prime Day just recently as well. So those results could signal a resilient consumer, depending on what we're seeing. But as I said earlier, seeing softening trends coming through from some of the biggest names, Coke, Starbucks, Netflix, Spotify, all pointing towards a slightly softer consumer coming through. So Apple and Amazon will be key names to watch there. But if we get a good number and a good read from, you know, Prime Day, although the results won't show up this quarter, we'll probably hear about how it went. That could be a big boost for Amazon's retail segment as well. So yeah, 4 massive names coming through, and will almost certainly drive markets in the back end of the week.
I'll tell you what, Joshy, what an update for us. I don't think you can go most places and get 4 of the biggest companies in the world and get a summary in, I'm going to call it 5 minutes, maybe even a little bit less. I think that's a phenomenal job. Well done.
Thanks,
and
Thanks.
Just while you were talking about Meta and all their hiring, it made me think, are they like the Chelsea of the company world? Are they just going and buying all this talent? Will it work out? Hopefully in Chelsea's case it doesn't, but for Meta's shareholders it does. And those 4 companies, I mean, these are ones that I use every single day, and I actually imagine a lot of people listening to this will use all 4, unless you literally just don't have an iPhone, because Meta, you know, if you think, I mean, I don't use Facebook, but I use WhatsApp every single day, I use Instagram every single day. We're working on Microsoft Word and all of these things, and obviously the cloud controls a lot of that, and Apple phone, you know, I'm on that all the time, and you know, I'm using Amazon, you know, many times a day, and you know, I know the companies are as well. So big companies, 20% of the S&P 500. But it is an interesting point you ended up talking there. You know, Spotify and Netflix a little bit weaker in their reports, albeit those were both companies that were near all-time highs and have been extended, and it's not a surprise just to see things cool down a little bit. But that will certainly be something to keep an eye on here as we get through tonight and tomorrow. By the end of the week, therefore, we're going to know a lot more about how this whole earnings season is going to end up. And if it's not great, there's only one company that can save it, isn't there? Nvidia. So we'll be waiting patiently for all of that. I'm sure that will be the case either way. Either means, earnings season's been bad, Nvidia saves it, or earnings season's been okay. What takes us to the other level? Nvidia.
Yeah, I mean, look, we have Nvidia in the background, right? Whether we want to sort of pull on it or not, it's like that substitution if you want to use it or not in the 80th minute. We don't really want to use it, but if you want to bring on Crouchy to nod one
Yeah.
at the back post in the last minute, then we might have to call him up. Get warmed up. Go on, get up
Warmed
there.
up, Sam.
We're coming for you. But look, we said it's a massive week as well, and just so much I think for an investor to sort of try and look through, and even ourselves, right? We're in markets. Like I said, I did a radio interview early this morning, and you sort of wake up and you read in the news so many earnings reports coming through, and it's so hard to sort of try and digest it. And then you think, okay, we've had all those earnings reports, and Friday we've got non-farm payrolls coming through as well, which are going to be really heavily in focus. So what are we looking at, Sam? What are we expecting from those numbers Friday?
Yeah, you're absolutely right. There seems to be, all of these things have been scheduled, and then yesterday, for example, just off top, oil spikes 4%, doesn't it? On sort of Trump and Putin and all of this kind of stuff, and that's now trading at $70 above 65 again. So there's something always going on. Non-farm payrolls, historically, anyway, has always been the main thing each month. That's definitely not been the case over the last few years, but it was always like, okay, first Friday of the month, non-farm payrolls, US jobs report. This is going to be massive because it's going to shape what the central bank does with interest rates. Now it kind of seems like every time we have this report, there's an excuse as to why it's been good or bad. Or when you look at the 3-month, 6-month average, there's nothing too crazy in all of that. But ahead of Friday, we are expecting 102,000 new jobs for July, which is down a little bit from 147 in June. So let's say we get 102 and we had 147. It's not crazy, really. But it's coming down. I guess that if anything, just off only that information alone, you would suggest that would be good enough for the Fed to cut in September, because of the job. But then you sort of think that's mainly going to be down, or the drop is going to be down to sort of government hiring as well. That's what Barclays reckon. They actually think a lower gain of jobs at 75,000. We'll have to wait to see if they're correct, as with all these predictions, especially on the day when I get sent reports of, these are all the banks and their predictions. You got some that will be 300 and some that will be 50. And you just think, well, come on, guys, what are we doing here? But unemployment ticking up, which is in line with sort of the steadily slowing job growth. Again, another thing that will be beneficial to cut rates. The Fed, I think, see unemployment around 4.5% by year end. So 4.2, another sort of 0.3% to get us to that year end target, if you like, albeit it's not a nice thing to say it as a target when you're talking about unemployment. Wages and average hourly earnings is expected to rise, though, which is up from 0.2. So you don't necessarily, if you're the Fed, want to see wages going up. If that was to come down, poor labour market, okay, let's cut rates. So we'll have to wait and see on that one. A couple of seasonal quirks to be aware of. The school year end and that kind of thing could potentially distort the data. So as always, hear the report, look at the revision, and take time just to read through to see if there has actually been something that completely explains why the number is higher or lower. And as usual, we always had a rule went on the trading floor. If your trader, so non-farm payrolls for the UK would come out at 1:30, and if you were trading at 2 p.m, you had lost money, and if you had done well, you were down the pub. So I kind of have always taken that with me. Really, the initial move is going to happen early on, and if it isn't a crazy day by 2 o'clock, get out of there. So that's kind of how I would view things there. But we'll wait and see. We can talk about the Fed now, Josh, because obviously they've got their meeting today, one of their 8 scheduled meetings. Any chance of a rate cut?
Don't think so. I'm not sure Jay Powell's going to be coming up with anything good. Last time they cut rates was in December. And then obviously, I think at the start of the year, you and Neza were sort of having that conversation whether we get a cut this year, right? And I'm not sure. I think we were balanced, right? We were kind of having a conversation. We might not see one, we might get one.
Yeah.
And we're sort of getting to that point where it probably is just going to be maybe just that one, right? They've been in sort of wait and see mode since. I mean, just to add into that, since the start of the year, we also know we've got this Trump and Jerome Powell love-hate relationship. I don't know where the love's coming for. It's just hate, really, isn't it?
Yeah,
Doesn't really
yeah.
seem to be letting up at all. And I mean, look, that's not great. Just that just doesn't really affect interest rates necessarily, but it obviously puts unnecessary pressure on Powell, and sort of takes into account, the Fed, right? It brings in question marks over the Fed. So that's not something you want as the most watched central bank in the world. Then we've obviously got trade tensions as well, obviously all to do with tariffs. Particularly we've got that, deadline coming through on August 1st. And that complicates the policy outlook for the Fed, right? Tariffs act as a double-edged sword because they push up prices, they add to inflation, but then could drag on growth by straining supply chains and business confidence. So, look, it's been obviously good news for the US more broadly, to make trade deals. Obviously, Trump obviously is taking charge as a businessman and not a politician, which is obviously good news in that sense. But given that rates are unlikely to change this week, the focus then turns to the commentary, right? Growth risks, tariffs. That's going to take center stage. Any hint that tariffs are impacting inflation could mean that we see sort of rate cut expectations push back. As we say, for now, though, markets pricing in just sort of one cut for the year. So I think it's going to be, all about Powell's commentary, all about what we hear from the Fed. And I think that we are only going to get one cut this year. I think that's what we'll see. And I think we'll have to wait to see if those tariffs have more of a flow through than we are, or the Fed were expecting. And I think that what that means is that I think the Fed will just sort of want to wait a little bit longer. I don't feel that is there any real, I mean, look, inflation has continued to come down. Jobs market is weakening a little bit, but is there anything blinding saying, okay, we need to cut? Probably not right now, I don't think.
No, I'm kind of with you. But I mean, I said something which is probably crazy last week. Like, imagine if this whole time this was just the best double bluff ever by Trump. And he was like, I actually don't want rates to come down right now. And he's just going to say, he said to Jerome, he's pulled him aside and goes, Jerome, listen, for the next year or so, I'm going to be really on your case, but we're going to work together. Okay. I'm going to say at every opportunity, rates need to come down and the market's going to run with that and push higher. And you're just going to say, look, we'll wait and see. We're all of this. And actually Trump, and after, the working day, they go have a beer and be like, got them again, didn't we?
What a day for the boys. You've had a great day today. They've all fallen for it.
Yeah. I don't quite believe that, but that would be incredible. What a double bluff that would be. And actually, it kind of brings us on to the next point, Josh, where we talk about sort of the trade deals. And has Trump actually and his team done really well here? I mean, only Canada and China have retaliated. I mean, he's just got this deal with the EU and everyone else is coming to the table as well. Like, I saw an article from the FT and they were kind of saying this exact thing. It's like, well, actually, he's smashed it. And we have a market analyst chat and someone earlier in the week after the EU deal was like, well, this is the art of the deal here. This is how it works now. So maybe we have to take our hat off to Trump, and I'll get your thoughts on whether Trump's done well in a minute. We'll just talk about the EU and that US deal. So the EU are going to purchase 750 billion in US energy and invest 600 billion into the US economy. So that alone is great. Also, the deal includes a real sort of significant purchase of the EU for US military equipment as well. And Trump on the weekend described the deal as the biggest ever. Of course, he would anyway. And then you got positive implications for the automotive and agricultural sectors there as well. And he mentioned that, he's exploring other deals with other countries, letters expected. August the 1st is just around the corner, of course, as well. But I mean, just on the face of it there, I mean, it's pretty good, isn't it? Feel free to sort of summarize how you feel about that deal, but also just initial thoughts on whether Trump and the team have done well here, or is it just all been a bit of a palaver?
I think you could probably come back to it in like a year, right? And
Yeah.
say, because what does it do for the economy? I think we just don't know. Like on the surface, you go, great, you've done a great job because, you're going to make more money for the country. Great. Perfect. That's his goal, right? He's a businessman. He wants to make money for the country, talk about the US debt ceiling, talk about all those types of things, fair play. And we know it's, arguably, we've not been around markets probably long enough in our young age, but it's probably the best deal the US government has arguably probably done from a tariff perspective, right? We might have to go back into the history books. If we had Ben Laidler here, he'd probably be able to help us. But the thing is with that, it's then what, like I say, in a year's time, how does that impact inflation? What does that mean for the economy? Is it dragging on growth? Is it meaning that unemployment has picked up, or is it, weakening business confidence and all those types of things, how that flows through to the economy? Is Trump still going to be sort of celebrating that these tariffs are great if, the US economy falls into a recession? Not saying that's going to happen, right? But these are all the implications that come from these types of tariffs. And then if companies, or if, countries do start to sort of retaliate a bit more, we don't want to pay these tariffs anymore. Do tariffs then change? Obviously, we've got another 90-day pause with China to sort of work that out. So I think it's more in terms of how it plays out over the next year. I don't think we can judge it now. I mean, look, the fact that the EU and the US have obviously come to an agreement is obviously good news, but I think for me, it's about how it plays out over the next year to sort of really see whether it's been a win or not.
Yeah. I mean, someone said to me a while back, with Trump, you've got to judge him on what he does, not what he says, which can be tricky, especially if you're someone who's listening to this and you're a Trump hater, which, by the way, I can understand why you would be at certain points, because some of the things he says, you're just like, what on earth is he coming out with here? Even if it's just talking about Jerome Powell, but he does get things done. And I think you're right. I think we almost have to fast forward and wish away time to actually know whether this is all going to be a good thing. For now, I'm leaning towards it is for the US. Your market's near all-time highs. Rates, in theory, are going to start coming down again. Okay, fine. Couple of good deals. Can that continue? We'll have to wait and see. But all is well at the moment. But heading into August, seasonally not a great month. VIX, lowest levels it's been for quite some time. Is that going to spike soon? I have to wait and see. Josh, as always, it's been an absolute pleasure having you on, mate.
Yeah, it has indeed, Sam. Always great to chat with you, and we'll be back next week.
Take care, everyone. See you then.